Hello everyone, it's Red with RedDragonLeo.com. Today is Thursday, the 31st of March, 2011. And we had pretty much a consolidation day. Really didn't do anything today, just a little bit of sideways movement. As you can see here, we closed with a little slightly down day, flat basically, which was what I expected us to do, but it didn't go exactly as I thought it would, but as I thought it would do. But nothing ever does. You know how that is. It opened in the morning, sold off, then back up, trade sideways, down, up, down. So the end result was pretty much the same thing. I actually had thought it was going to sell off a little bit more, and then come up and kind of do like more of a V pattern, I guess. But you can't get them all right. The end result still worked out the same, so I didn't take any positions at all. So I was just setting this one out because I pretty much knew these charts were going to fight each other. So now what do we have here? Going into tomorrow, it looks to me like, unfortunately for the bears, we are oversold on the histogram bars here. We could continue down if the numbers on the non-farm payroll report are really bad. We could continue down because the MACD lines are not oversold. They could go down here to negative 7.5. That's possible. The full stochastics could just roll over and stay down here buried at 20. I just don't think that's going to happen. I'm sorry, but when you get moves like this where you are going down here to negative 5.0 or negative 7.5, like back here in this area, this is generally when the daily chart is also pushing down on the market to help push it down, which is exactly what happened during the sell-off. Okay, the daily was pushing this market down here during the sell-off. That's not the case right now. Yeah, you see right here, see how the daily was pushing it down. The daily is now pushing up, and this is going to prevent any big sell-off until that thing curls over, which leads me to believe that for the most part, until the daily starts to roll over, we should see the MACD moving average lines here stay above this zero and not go down here to this buried condition here of negative 7.5 or negative 10. It's not likely to happen as long as the daily charts are pushing up, and that's exactly what they're doing. So I think that what is likely to happen is that this is going to curl right back up tomorrow morning, and we are going to have a kind of a rally tomorrow morning, and probably throughout the whole day. I don't know how far, but you look at this clearly here on the 60-minute chart. It's up, sideways consolidation. That's a bull flag. So we should pop up here and hit this double top at 1344. The Dow is almost it's just with a few points from hitting its double top. The Russell is already broken out and it's already hit a double top. So you got to expect the S&P to follow, and especially when this daily is still pushing up, not curled over yet. Right here, it looks like it's ready to, but I mean, look how long this could be. I mean, it could be one of these numbers. Look how many days that was before it curled over. Or here, same thing. I mean, this whole long move before it finally curled over. You can't expect it just to roll over right off the bat on the first hit. So I am expecting a rally tomorrow. So if the non-farm payrolls disappoint and the market panics a little bit and sells down, it's possible they can break this line. That's possible. I think the most you might get is just this gap fill, break that line, and then run right back up and follow the outside line right here, and probably end up either back in the wedge or just trailing the wedge up all day until it closes at a double top or something tomorrow. It could close right there at that double top. That's what I'm thinking is possible. You don't expect it to break through it on the first hit, so that's why I would think that if we do hit it, I don't think we'll go through it on the first hit. That means today or tomorrow. You know, maybe it'll go down a little bit Monday, then back up and come back up, but I kind of get the feeling they might bust out of this wedge, come down here, fill this gap right here at 1320, possibly, and then run it back up. It kind of gives them a little bit more room to move. It would also, you know, put the 60-minute chart down a little bit further, maybe down as low as this -1, or even maybe as low as here, if it goes down in the morning. If it does, I do fully expect it to curl back up and rally the rest of the day. Now, if it does not, if it simply opens up flat, then, you know, it doesn't, you know, if it just opens up flat, then if it's light volume, you can pretty much expect it to rally. It might be slow in the beginning because this has to turn. It has to roll back up, and you know, this one here would also have to curl back up. But you can see it's oversold here on the MACDs. So, and it did sell off there until the close and hit this rising support line. So, you know, like I said, it's possible we could break down here, fill this gap, then run back up and try to hit this double top up here at 1344. It very well could. I think it'll bust through this area that's been consolidated on for, you know, 2 days now. I think it will definitely bust through that. So there's also the possibility that we could gap up. I mean, you know, there's also that possibility. It's hard to say what the market's going to do on the gap up or gap down. I'm not really expecting either. Probably just a flat open, most likely. As you can see here, same thing on the 15-minute chart, just lost sideways consolidation, little sun into the close. But it's looking to me like they are going to take this thing up after possibly coming down here and filling this gap. Nothing to say that they will, but I just kind of think that the numbers that they will release might cause some people to panic a little bit, and so therefore it might sell off a little bit in the morning. Regardless of the numbers, it really doesn't make any difference. It's a no-win situation for the bears. If the numbers are horrible, then the market might sell off initially and go, oh, wait a minute, well, that's good news because we'll have QE3. Give me some more heroin. You know, I need some more cocaine. So give it to me, folks. Inject me. And so the market gets its Viagra, and the market just goes right on and ignores the fact that people are losing their jobs and can't find new work, and people are going homeless on the street, and they don't care. The market just doesn't care. It's an evil beast run by evil people like Ben Bernanke and Geithner, and well, they're just minions, of course. We all know that. But the evil cabal is really the Rockefeller family and Bush and Clinton and Kissinger and all these gangsters. But anyway, they're going to do what they're going to do. They're going to push it up as long as they can until they finally get it up as high as they can get it, and they're going to let it collapse. That's the plan. Whether or not they succeed or not, we don't know. So looking at the 60-minute, again, is the same scenario pretty much. We could very well possibly bust out of there and close this gap and then run it up. So, of course, if the non-farm payroll reports is good, then the media will spin it and say, hey, it's great, the economy is booming, blah, blah, blah. So we don't need QE3, so we'll be fine. So let's buy more stock. It's, like I said, it's a no-win situation for the bears. So that is what I'm expecting, and at this point, I see no reason why they won't, you know, maybe sell off something next week, maybe put in this right shoulder, and then possibly we'll go on up to our fake print of 13. Well, it's actually 138.86 on the SPY, which is approximately 138. I'm sorry, 1388 on the SPX approximately. And who knows how long it'll take to get there for that. Could be next week. You know, who knows? But they can just keep pushing it on up. There's nothing to say that they don't have to, that they have to come down here for this right shoulder. We're just speculating on an inverse head and shoulder here. We don't know that that's going to happen. You look here and you can clearly see this histogram, or these MACD lines, and are still pointing up. No signs of it rolling down, and they're not even getting close together like they are here. You see, when they start to get close together, you start to see them sometimes ready to roll over a little easier. It just seems like, but they're far apart. That just kind of tends to lead me the credence that they're going to push it up further here before they kind of flatten out and roll over. Just a theory, but you know, just like over here. Look here, you can see how they pushed up, finally started to get close. Look like they're ready to roll over. There's just no signs of that right now. So we do not have to come down. We do not have to come down. And looking at the weekly, it very well could curl right back up and then go up here and stay up for a couple weeks before it finally rolls over. Nothing to say it won't. So I just want bears to be aware of that. So for tomorrow, I am expecting an up move, whether we get a down move first in the morning and then up all day, or whether we just open up and then up all day. I'm expecting an up move tomorrow to happen. So, and it very well should take out this area here and this top here, and it should go up here. If it has enough strength, it should go up here and try to attempt the 1344 top that was put in here. You can't really see it on this chart, but there it is, 1344. So that's it, gang. Good luck, everyone. For you bears, hang in there. That's all I can say. Hopefully you're able to hang on through these rough spots. I know for me, playing options, I have to get in and get out, get in and get out. So that's all I can do. But for those of you holding a little bit longer term, yeah, I think the rest of the year, this late September and November, the crap's going to hit the fan, and yeah, it's going to fall apart. So if you can hang on that long. But anyway, gang, good luck, everyone.